Hello everyone. I just finished reading Benjamin Graham's The Intelligent Investor. Although I don't understand most of the math stuff, such as calculating price-to-earnings ratios based on a multi-year average of past earnings, and other such similar stuff, there is one constant theme throughout the book that did surprise me: the importance of the investor's behavior. Self-control, managing our own behavior, is just as important when it comes to investing, if not more so, than the actual investments. Just listen to these quotes. In the end, how your investments behave is much less important than how you behave. Be patient, disciplined, and eager to learn. Harness your emotions and think for yourself. Control self-defeating behaviors that keep most investors from reaching their full potential. Where and how can these quotes be applied? The stock market. It fluctuates. Graham tells us to never buy a stock immediately after a substantial rise or sell one immediately after a substantial drop. And that the intelligent investor must refuse to make decisions based on market fluctuations. Think for yourself. Mr. Market gives you prices, but you decide whether it's to your advantage to act on them. You don't have to trade with him just because he constantly begs you to. Understand yourself. Then ask yourself the following: what type of investor would you like to be once you start? Graham states, the rate of return sought should be dependent, rather, on the amount of intelligent effort the investor is willing and able to bring to bear on the task. Graham gives two types of intelligent investors: passive and active. The passive or defensive investor's approach to investing is minimum effort for safety and freedom. The goal of this approach is to avoid serious mistakes and losses, freedom from annoyance, effort, and need for making frequent decisions by creating a permanent portfolio that runs on autopilot and requires no effort, but generates very little excitement. This approach is emotionally demanding. The active or enterprising investor's approach to investing is maximum effort for max intelligence and skill. The goal of this approach is to devote time and care to selection of securities both sound and attractive by continually researching, selecting, and monitoring a dynamic mix of stocks, bonds, or mutual funds. This approach is physically and intellectually demanding. There is no right or wrong answer when it comes to either approach. Graham tells us, investing is not about beating others at their game. It's about controlling yourself at your own game. The whole point of investing is not to earn more money than average, but to earn enough money to meet your own needs. So how do you start investing? 1. You can do it yourself. There are several online brokerages such as Fidelity, Charles Schwab, E-Trade, and much more. 2. Get some help. You can hire brokers, financial and investment advisors, or financial planners. Or 3. Farm it out. If you don't want to deal with the hassle of researching and picking individual stocks, bonds, and other stuff, invest in mutual funds. You or the other person you've hired can pick a diverse portfolio and set it on autopilot. Whatever you decide to do, make sure you research before starting. Research, research, research. I can't stress that enough. And neither could Graham. That is all for today. Stay safe and take care.